Ladies and gentlemen, good day and welcome to Techno Electric and Engineering Company Limited Q4 and FY2024 earnings conference call hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. And I'll hand the conference over to Mr. Suraj Sonolkar from Asian Market Securities Limited. Thank you, and over to you, sir.
Thank you, Neha. Good afternoon, everyone. On behalf of Asian Market Security, we welcome you all to Q4 FY24 earnings conference call of Techno Electric and Engineering Company Limited. We have with us today Mr. P.P. Gupta ji, Chairman and Managing Director, and Mr. Ankit Saraiya, Director, representing the company. I request Sri Gupta ji to take us through the overview of quarterly result, and then we shall begin with the Q&A session. Over to you, Gupta ji, sir.
Yeah, thank you, Suraj. Very good afternoon to all of you, and I welcome everyone to discuss our financial results for the quarter ended 31st March 2024 and for the full year 23-24. Anything said on this call which reflects our outlook for the future or that could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the industry and in turn company faces. Let me highlight our performance, and I am very happy to share with all of you that so far this is the best performance of the company in recent past, I will say. But this is only a beginning of the journey. I had mentioned a year back that morning has happened, so you can take it as a first bright shine of the sun, where sun is yet to go beyond 8 a.m. In the day horizon. Let me quickly highlight our performance for the Q4 financial year 24. The company has created as you all know, they has set up a SPV for a 40 megawatt data center at Chennai. The asset is still in implementation stage and is not revenue accretive, but is definitely value accretive. In the consolidated results, we knock off the value of the work done for this SPV as per the accounting standards requirement, and that is the major difference in the standalone and consolidated results. As and when this asset becomes revenue accretive, it will start showing, it will become part of the mainstream results. As you can observe from the details furnished on the exchanges, the total revenue of the company in a standalone is at 482.67 crore for this quarter and is up by 7.5% year on year and almost about 30% higher than quarter on quarter. The EBITDA for this company is at 58.84 CR and is up by 52% year on year. The other income is at 31 CR approximately, and it is higher by about 40% on last year. The profit before tax is at 83.5 CR, higher by about 58%. The PAT of the company in this quarter is at 69 CR, up by about 91%. The EPS in this quarter is at 6.45, which is almost double of last year. In the full year, I will say our revenue is at 1680 CR, which is about 75% higher on year-on-year basis. And EBITDA for the company is at 226.9 CR, which is almost about double of last year. The EBITDA margin is at 13% compared to 12.5% last year. Other income for this year is at 131 crore compared to 74.30 crore last year. The company has made in addition another OCI income of a net of tax at 28 CR during the year. The profit before tax is at about 334 CR, which is almost double of last year, and profit after tax is at 270 CR compared to 128 CR of last year. But if we add OCI income to it, the total profit will be at 298 crores. The EPS without considering OCI income is at 25.3 compared to 11.73 crores last year, which is 11.7 last year, which is almost 115% up. The cash or current investment value as cash and cash equivalent in our books continues to be at 1200 CR, which again means about 110 rupees per. And this treasury income out of this deployment of funds will continue to be a recurring income for the company. For the financial year 24, we have received a order intake of 7,000 crore, a all-time high in our history of the company. The unexecuted order book is at 9,200 crore already, and we are after March we are already placed L1 in business worth about 10,050 CR. We have won during the year 2 TBCB concessions, one at Gogamukh and another at Bokajan, which together means a revenue over the concession period entitlement of 2,800 CR, and the expected value of EPC works out of these two companies will be almost about 675 CR. Similarly, we are also placed L1 in Punjab for feeder metering, which is a high-end meter work. The total meter deployed is only 1.86 lakhs, but the order value is 661 CR, implying thereby that each meter is about 37 to 38,000 rupees. We hope to get more business, but putting conservatively that we should at least can expect 5,000 CR this year too out of the opportunities available in the market. But the pipeline is a lot more. We have announced a dividend of ₹7 per share, which amounts to 350% on the face value of the share. Similarly, I will like to mention, as you all know, that we are likely to go for a QIP of 1250 CR. But mainly we will like to engage with large FII, FPIs and mutual funds for the issue. On the outlook side, I will say it is very bright. After a negligible or nil energy growth over almost continuously for last 8 years, the energy demand is back and is all-time high, and the demand growth is in double digit now. The present peak load demand in the grid is no less than 240 gigawatt and is expected to be 400 gigawatt by 2030, thereby implying that as per the per capita consumption of power in India is growing phenomenally which is at present 1250 units per capita, is likely to be 1750 units by 2030. So we are catching up with the rest of the countries in the world. To meet this demand, obviously the power plant capacity has to be enhanced both in conventional energy by 80 gigawatt as approved by government, and also the energy transformation as happening of achieving a renewable power penetration of 500 gigawatt to the existing to our grid by 2030 is also on track. All this means that the sector is now transforming hugely, and it will necessitate deploying high-end solutions, high-end in scale and complexity, namely supercritical power plants, 765 kV, AIS, GIS transmission solutions, STATCOM solutions, VSC, HVDC solutions, backed by BESS or pumping storage solution facilities or gas-based facilities, where your company has a larger presence than any other entity in the marketplace, I will say. So I can call that that this means or implies a paradigm shift in the positioning of the company in this space. As you all know that your company is presently present in all the areas of the power sector, we can call 360-degree presence in all value chain of the power sector. Namely, we are part of the transmission solutions, high-end transmission solutions. We are part of the AQI solutions, namely FGD, air quality implementation solutions. We are present in the digitization of the distribution networks as well as smart metering deployment under RDSS scheme of the Government of India. We are also present in the hyperscale as well as in the edge data centers in the country going forward. So all these means use business, all these verticals are full of potentiality, and it is for the company now to take a larger lead and harness the opportunities. All these verticals are full of opportunities. Coming back to renewable power, I will say that CA has already given a report on transmission that to penetrate 500 gigawatt by 2030, a capex of almost about 2.4 trillion rupees will be required, and which means almost an addition of more than 4 lakh MVA transforming capacity and about 51,000 circuit kilometer of lines. And simultaneously with these investments, the inter-regional transfer power capacity will also get enhanced under ISTS mode to no less than 100 gigawatt by 2030. Thus, Power Grid sees a large addressable market, and our estimate is they have already announced a capex of 1.71 lakh crore up to 2030 and almost about 2.5 lakh crore by 2032. And we expect and they have announced the revival of capex to 20,000 for the current year and 25,000 for the next year. So next 2 years, this is the target of Power Grid. This makes us optimistic pickup in Power Grid's capex, asset capitalization, which again means a sizable opportunity for Techno. I am happy to share with you that even today, just an hour back, we are placed L1 in a transmission concession at Ladakh for Nilgarh project, value about 170 CR. So all this means even in conventional thermal power plants where your company has been played a significant role in setting up no less than half the conventional power capacity in the country over the last 4 decades. This also means an opportunity to us as a balance of plant or switchyards in the country. On the distribution side, under RDSS scheme, a lot is happening now. But apart from smart metering, a lot of digitization and of the networks is happening. We are already doing a digitization of the distribution network of DVC in their command area in Jharkhand and West Bengal. So these distribution networks in the coming days are going to become more smarter and intelligent, and obviously they can be remotely controlled, and consumer will stand served like a telecom. Apart from these, we will definitely need some sportive areas which will come in the future, like battery storage solutions or pumping storage solutions, and also I will say deployment of STATCOMs and HVDC solutions, and your company is qualified and competent to provide all these solutions in this space, because we have the presence in the power space only. The FGD segment is also, we see the momentum is back. We are finding a lot of attraction from the SEBs now to set up FGD plants in their ongoing thermal power plants. Still, almost about 125 gigawatt is yet to be fitted with FGD, which mainly comprise of leftover works of CPSUs, but mainly of SEBs and private sector. And the total capex involved is no less than 1 lakh crore in this area. The TBC transmission segment, again the TBCB bidding is happening strongly, and almost about 40,000 crore of bids are already in the bidding process, and we are supporting different bidders on the station side. We have already won transmission assets, transmission station work of 4,300 CR in the last year, and we are also won 2 TBCB orders as mentioned earlier with a revenue entitlement of 2,800 CR. Similarly, in metering segment, we are already doing 3 million meters for an order value of 3,500 crore in the states of J&K, Tripura, Jharkhand, and MP at Indore city. And we are also now L1 in Punjab to do again a high-end metering work of the feeders, which is only about 1.86 lakhs for almost an order value of 666 crores. So similarly, on data center side, I will say that we have recently won a concession from RailTel, where we'll be setting up 100 plus edge data centers on the very prominent all railway stations of the Indian Railways, and the digitization plan of the railway in partnership with RailTel. We anticipate this to be a very huge opportunity, as to begin with as a value accretive and later on as a business. Similarly, in data center also we will say that a lot of scope is with every passing day, and we expect that almost the capacity of data center will be about no less than 1.5 gigawatt by 2025, and this is likely to be about 5 gigawatt by 2030, I will say. So which is a huge business potential. Again, we have been allotted land after in Kolkata to set up a data center next to the very data centers being set up by STT and Reliance, as well as Adani Connect, I would say. The market size in this, in terms of revenue, is likely to be no less than $5 billion by 2030, year on year. The growth drivers of data centers, you all know, is basically out of the cloud services, which have become a way of life in efficiency and cost economy. Also, the policy of government on DPDP, data privatization, data localization, and so much of digitization, phenomenal digitization, which has happened in the country over last 4 years post-COVID. We are next to no other country in the world now in this space, whether they are DBT or payment vehicles or e-commerce or IoT or OTT or ISP services. Almost 800 million people are on ISP now, even in the rural areas. So all this means a lot, and additionally this sector is also now usually charged by AI, artificial intelligence, which means again I see going forward gigawatt scale data, digital data centers happening in the country, just like transmission stations. Probably 10 years back, none could have visualized substations with a capacity of 10 gigawatt to 25 gigawatt each, which is becoming an order of the day now. So all this means use opportunities for your company. I will say that our data center is likely to be ready by September 25 in Chennai, and we see a lot of interest in this, and we have spent by now about 300 CR in this facility, I will say. Another good thing which have happened, that whatever assets we had created over the last 15 years now stands monetized successfully in last 4 to 5 years, and we possess no asset on hand today other than the data center under construction. Our all assets in renewable power, transmission assets under PPP model or under TBC mode all stands monetized. This has resulted in a strong balance sheet, very strong balance sheet, with a cash surplus of 1,500 CR in the books of the company, and is available for next phase of growth and deployment for all these opportunities. Again, I will like to repeat that during the last year I had mentioned that morning has become, and this is only the first shine of the sun, which will keep brightening with every passing year. We are confident to achieve a revenue of 2,500 CR for the current year, and another similar growth to 3,500 CR for the next year or more. The EPS will be 35 for the current year and 50 plus for the next year, ending with March 2026. With this, I will now invite your participation, and anything you want to know more about us, you are welcome.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Madhu Kela from MK Ventures. Please go ahead.
Guptaji, good afternoon.
Your presence is very exciting.
Good afternoon, and thank you so much. And first of all, congratulations from my side. More importantly, holding the company together in most difficult times. I think you are one of the few people I know in the sector.
I request you to use the handset, please.
Hello?
Yes.
Yeah. I said you are one of the few people I know in the power sector who have generated real positive cash flow in such a troubled time in the last 20, 30 years of the sector. So, image of our company, Guptaji, is generally that we are conservative. And my fear is not on the opportunity. My fear is more on the how well the company is prepared to capture this opportunity. And it will benefit a lot if you can, elaborate. You said that what we can achieve in the next 2 years. But if you can elaborate what the possibility and aspiration of the company is over the next 4 or 5 years, I think that will serve a lot of purpose. According to me, this company has a potential to even do a 10,000 crore top line if we take a 5-year view. So would you concur with that? And are we even aspiring to achieve something like that?
Sir, your question is very inspirational and soul-searching, I will say. This definitely in my lifetime I have been conservative, and I trust this has rewarded the company. And now the time is of growth. Keeping behind any of the challenges on, I will say, the geopolitics or of the very impact in the country, I fully agree with you that Techno can do 10,000 CR by 2030 without any doubts, and it is doubling year on year. This year it is almost double of last year, and next year again it will be no less than 70-80% of this year, and the growth will go on like this. I am very sure, sir, that we will be able to meet the expectation of the investor community, but we have to evolve.
Hello?
We have to evolve. Can you hear me, sir?
Yeah, I can hear you.
Yeah, thank you. Company has to evolve and transform itself, which we are doing it. We have set up a office in Delhi, and we are now doubling, or rather, I will say tripling the size of the office in Delhi, sir. It is a part of our own complex where Tata Bata are also our tenants in Gurgaon. We have taken a full floor on 6th floor of the building. It is under furnishing. Lot of people are under recruitment on the IT side, data center side, as well as on the transmission, smart metering. We are very focused on IT layered now power solutions, and we believe that is the future of power. And it is more rewarding than pure commodity solutions in power sector. So I can assure you that we will rise to achieve 10,000 by, if not 28, at least by 2030, sir.
Guptaji, I have a few more questions. If you don't mind, I can carry on. One is that, we already have 1,500 crore rupees of cash. You said that we will raise 1,250 crore rupees by way of QIP. That makes it 2,750 crores. Plus the profit of over the next 3 years. Plus the monetization of the data center, which you had already alluded to. So this will be a lot of cash, roughly 5,000 crores or more, based on my, 360-degree calculation. So if you can elaborate as to where are we planning to use this cash, and knowing you, I'm sure you have never been in a capital intensive mode. So wherever we use this cash, how this cash will come back, and what kind of threshold IRR we are looking at while we are investing this cash.
Sir, you want to know my business secrets?
No, Guptaji, that is important, for a shareholder like us. We only get this chance once in a quarter.
Thank you, sir.
Yeah.
Sir, what we see in the market of investments, that generally an investor always looks for phenomenal returns in India while deploying funds when project is in a build-up construction stage, deployment stage. They don't trust our type of firms to do jobs in time, quality jobs in time, create sustainable value accretive assets. So all these challenges makes them expect 16-18% returns on whatever money they invest. My takeaway has always been that Techno is good in it. We have successfully done it. We have delivered more than 400 projects in the past. So there is no reason to have money from any of these investors while deploying the assets, whether it is smart meter, it is data centers, or even TBCB projects, or any other project of a large value we may like to take tomorrow in BESS or PSO or any other emerging solutions. You see. So my takeaway is that I must be sufficiently funded where I build these assets out of my own funds and then monetize when they are revenue accretive, not when they are in the capex mode. Once it is ready for OPEX solution, we are there with them. Then the investor is ready to be part of us at 10-12% also. So that delta of 5% I want my investors to earn along with us as a financial reward, which we have done. Like we created assets in transmission, renewable power in last 10-15 years worth about 4,000 CR. And we made a capital gain of no less than, I will say, about 750 CR in parting those assets, all at a gain, sir. If equity deployed was in those assets was almost about, say, 1,500 CR, we received 1 and 1.5x on those assets. So same strategy we want to deploy here. You make EPC margin while deploying the asset, and after that asset is revenue accretive, bring a investor and part of with it. So that this 5,000 CR remains a criticality, a critical investment all the time with the company, where going forward we are able to sustain even any odd happening in the market. Many infra companies in last 10 years failed because a lot of counterparty, commitments were not kept by them. The biggest ops means a company called ILFS, so used and still so big a failure in the market only because of the counterparty risk. So it is always a good idea that when you build these kind of capex, you must have another amount in the pocket to sustain it for a year or more, even if anything goes wrong. So all these considerations are behind us, I will say, while building on it, a financial model like this.
So, Gupta ji, my last question is, while financially we are prepared to really capture this opportunity, and I trust you, can you elaborate a little bit more on the manpower requirement? What kind of people will require to execute and make this company go to 10,000 crores in the next 4 or 5 years? And what are the real biggest challenges which could come in our way to achieve this objective?
Sir, I will only say that, sir, the challenge is always learning and remain ahead of learning as a requirement of the very solution. And that is why we always remained in a power vertical, not as an element, but as a 360-degree presence in this sector. We understand this sector as a very electricity act, very regulatory nuance, very nuance of the programs of the government of India and its achievements, and as well as our participation in this sector, that most large players in this sector today say that Techno can do what they are capable of doing. And also we are serving them additionally, I will say. But where we are differentiating over others is by going beyond power into power guzzling solutions like data. I believe society will depend on 2 things going forward, sir. One is a data and another is energy. Like if you read the statement of Tesla's chairman, he has only said, I can create as many data centers catering AI solutions as possible, but I don't believe energy will be available. Pipeline to energy will be available. So this is where Techno wins over many others, that I can link solutions as well as provide energy to them, both. And India is globally competitive today in energy. The energy, if you look on Singapore, you look on Europe, you look on America, nowhere this energy today is less than 12 to 20 cents. Whereas in India, we can provide at 8 cents, even today, in these applications. So gradually, world will realize the importance of location as India trust more of our Indian capabilities, which all have served abroad successfully, but not in India on Indian soil. That is where we want to blend with them, sir. And all this knowledge has to be part of Techno. I will like Ankit to elaborate on this. We have already done many recruitments. Ankit will elaborate that. Ankit, are you there?
Yes, I'm here.
Yeah, can you elaborate how you are going about recruitment and expanding Delhi as a base?
Yeah, we over the last 6 months, we've made a target to start recruiting leadership team at for different roles and responsibilities, and addressing it more on each vertical basis. So today we largely define Techno into 4 verticals. One being obviously the T&D, FGD, smart meter, and data centers. And we've come to realize that each vertical has to have its own leadership team and each have to be dealt as a business unit in itself, an SBU per se. And that's how those recruitments have already started. So as we speak, we have already taken on board Mr. James Strout from US, who was the founder of Vantage Data Center, CoreSite, both the companies today being close to $15 billion each. He was the founder who exited to Silver Lakes Capital. He was also the founder of the largest DC data center operator in the world today, which is Digital Realty. He was a founding member of that group. So he's onboarded now on the board to guide us developing largely the marketing, sales, and operations team. And we started engaging with those teams in US. So we are trying to create a team in US itself to work closely with these hyperscalers like Amazon, Google, and others, where the design decisions take place. Execution may happen through APAC, India, but the larger design decisions happen over there, and we want to start influencing those. Similarly, we are starting to create a business unit. We are exploring to engage a business unit head for data centers, along with a very, very large sales team, for the reason that change the strategy. And going forward, we've engaged with, we are trying to bring a good finance and accounts team also for the entire group. So slowly,
Mr. Mishra, you can highlight on the renewable side.
Yeah, and on the renewable, we've also engaged with Mr. Shailesh Mishra, who was Director Technical in Solar Energy Corporation of India. He's full-time with us now. And his guidance and his visions on what renewable energy or power sector will look like tomorrow, we have already started working on that. So yes, we are becoming a little more conscious on developing top management, and leadership roles are being defined, and we are aggressively looking for this year especially. We'll be concentrating on developing those things. Especially for IT, we have picked up someone from a PSU who was heading who was the chief technology officer over there. We thought that PSU engagement would be the best, because given Techno's relationship with customers are also around PSUs and CPSUs, so that culture fit is good. We picked up someone from ENY again for heading our finance, accounts, and strategic planning and other things, and audit. So she will also be joining very soon.
Sure. Thank you so much. Thank you so much, Gupta ji. Thank you so much, Ankit. Really, really appreciate giving you an opportunity. Wishing you all the very best. I wish that you create the most respected and the most valuable company out of this sector, considering the opportunity which is there in front of us over the next 4 or 5 years. All the best. Thank you very much.
Thank you. Thank you so much.
Thank you.
Thank you. The next question is from the line of Venkat Subramaniam from Organic Capital. Please go ahead.
Guptaji, a lot of my questions have been answered. If you recall, over the last couple of calls, I've always been asking about, how we are going to empower ourselves with on the people side. So some of Ankit's answers are pretty useful. From whatever I can see, we have now clearly, transcended to be a technology provider than just be, a contractual obligation provider. Given this growth just now, are we getting paid sufficiently? In some of the segments, we probably should get much better margins. So are you seeing those opportunities? And if you do, in which areas are they?
Absolutely, Venkat. That's why I use the word, this is a paradigm shift for Techno now. That we are no more rubbing shoulders with the conventional players, limited to conventional solutions in all low end or mid end. All this sector is now having opportunities as I call it mediocracy to technocracy or high-end complex solutions, and definitely they have rewards in it. And we are definitely built for it. We definitely look forward to enhancing our rewards to more than 15% going forward over next 2-3 years. And even what Madhuji had asked, I will say the IRR looked upon by us will not be less than 18 to 20% on all these investments put together.
That's lovely to hear. We have always known you to be, ultra conservative, and I've never seen you this excited. We can clearly see very, very exciting times coming ahead. Best wishes, Guptaji. Looking forward.
Sir, for 8 years, this sector has only suffered. What could we have done better? Anybody going aggressively in those times would have burnt himself, I can assure you. Today is the time to benefit now. We have cash, we have strong balance sheet, we have good credentials, and we have good knowledge to encash going forward opportunities. I can assure you, Venkat, tomorrow is the day for us.
We can see it, sir. All the best.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, hi. Hi, sir. Congratulations on a good set of numbers, sir. So a few questions from my side. First is, what is the current order book and L1 position? And can you break up the order book into generation, transmission, distribution, data center?
Yeah, no issue, sir. We have total order book of about 9,200 CR as of now, unexecuted, and we are almost 1,050 CR in L1 position as of now. Not March, as of now, I would like to use. Out of this, I will say that about 5,000 is in transmission, which includes about TBCB transmission assets of power grid about 3,000 CR, and TBCB won by private players and Techno is about 1,500 CR put together. FGD is about 1,300 CR with us. That is a power plant generation side. In distribution, without smart meter, I would say that we have business worth about 350 CR now. Not 350, about 400 CR you can say, including Tripura. And then smart meter, we have worth about 3,500 CR already with us. And data center, of course. We are not able to place a value on this concept of edge data center. It can be total game changer for the company going forward. But I can say minimum over next 4 years, it will be at least 1,000 CR, even if I take 10 CR per location in 100 railway stations.
Sir, is it right to say that we have won around 100 data center, 100 edge data center, and you are saying that 10 crore per data center, right? That's why you're arriving at 1,000.
Yeah, absolutely. We have partnership with RailTel on a concession of 20-year basis, and we will be deploying in all prominent places the data centers for that.
Understood, sir. My second question is the order inflow. So you gave a target of 5,000 crore. And if you look at all the underlying businesses, I think, be it FGD, be it data center, be it smart meter, or be it transmission, I think the opportunity size will only ramp up compared to last year, isn't it? Especially given the fact that Power Grid has done at least C2 and REC and PSC has done 47,000 crore worth of bidding last year.
Absolutely right, sir. It is always more gratifying or satisfying. You say 5,000, achieve 8,000, rather than other way around, sir. So, we will like to pick and choose going forward now. That is our aim. Risk reward must be evaluated very properly, which we have done, and we should be able to do a contract in time. So all these factors we will keep in mind, sir. But you have a point. The opportunities are a lot bigger than what a number I have given you. Hopefully, I will beat my own number, sir, and I am here to do that.
My last question, sir. Do you intend to keep bidding for TBCB assets on our own balance sheet, or is that the two which you won is enough for now?
Can you repeat your question, sir?
Do you intend to keep bidding for new TBCB assets on our own balance sheet?
Yeah, we are doing it, sir. Absolutely.
You want to, sir. Last year you want to, but you want to do more given that TBC pipeline is humongous this year, right?
Sir, but we don't want to aim at each concession capex of more than 500, 600 CR. On an average, we want to be in a low capex solutions so that the IRR available to us is larger than what is available in competition to giants like Power Grid and Adani or others. So we want to be in a safe haven.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. The next question is from the line of Abhishek from Naredi Investments. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. And my first question, what is CapEx plan for our entire company and especially for smart meter and transmission segment for next 2 years?
Sir, already I have stated it will be in total you can take almost about 5,000 CR for 2 years, 2,500 CR each year.
Okay. And the second question regarding smart meter, it is perfectly cash consuming business because a smart meter delivered today and you received money in 93 months. Can you rethink this business model because it is a heavily cash consumed business?
See, there is a period to deploy meters. All meters are not to be deployed on the zero date, sir. What the system is that you have to deploy it in 27 months. And the first lot of 5% must be achieved at the first 6 months. Thereafter, 5% every. That is the model, sir. So from 7th month itself, you have PM can start. Not everything happens after 27 months. So you have a progressive completion, progressive revenue accretion. There is some disturbance in the system, man. Yeah, can you hear me now, sir?
Yes.
Yeah, some disturbance was coming in the system. Yeah. So in smart meter also, there is a revenue accretion from 7th to 27th month also. All is not happening after close of the scheme. That is a beauty part of it, number one. And number two, you see, if we like in between, we can always discount or securitize our bills with REC PFC under the very scheme. and they are very eager to build up their books, if we like, post revenue accretion. What I have said is that the capex we want to do out of our books, but once a meter or a lot of meter is ready for OPEX, we can always monetize it. Partially also, progressively also, and completely also as a SPV. So all those choices are on our table.
So going forward, we bid 2 million smart meters for annual.
No, sir, monthly. We have a DDF. There is a DDF facility. They call it direct debit facility in the program, sir. That is an agreement with the banker itself of the utility. Banker is a party to it. He is supposed to debit the utility amount which is collected month on month from the consumers. So he has to debit my payout first as an obligation. So the mechanism is healthy, and we hope that there is no abuse to it.
Okay. And sir, last question: how much capex? So much capex you are planning. So why you give such a handsome dividend? You must keep the money for long growth of the company.
Sir, we have been always rewarding our investors and still keeping a fiscal discipline. We are totally a debt-free company. We ourselves have a cash of 1,500 CR. So paying a dividend, I think my investor deserves a dividend payout of at least as a dividend payout policy of the company, which is 25% of the bottom line. So we are honoring the dividend policy of the company.
That is good, but one side you pay dividend and other side you raise money from QIP. It is good.
It is good for the investor, sir. QIP gives you the value accretion to the stock, and dividend gives you the cash. I think every investor looks for that, sir.
Thank you, Abhishek. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you. The next question is from the line of Dhiral from Phillip Capital. Please go ahead.
Good afternoon, sir. Thanks for the opportunity and congratulations for the great set of numbers. So you talked about 5,000 crore the capex for next 2 years. So if you can bifurcate where this amount will be utilized for which segment?
Sir, at the moment you can take it about 25% into data center and 25% into your TBCB and another 50% into smart metering.
Okay. And sir, any timeline by which you want to raise the QIP so that we can able to utilize the fund?
By September, sir.
Sorry, sir?
We'll complete it by September of this year.
Okay, okay. And so you, in the initial commentary, you mentioned that we have also L1 in the Punjab smart meter, and the cost of the smart meter is almost 35 to 37,000. So any reason why such a high amount for that project particularly?
So that is the type of metering required in the feeders. Feeder metering is very different than consumer metering, sir. There are multiple applications of the meters, whether it is a DT meter, it is a 3-phase meter, single-phase meter, feeder meter. So all meters are not priced equally, sir. They are of different purposes.
Okay, understood, sir. Thank you so much, sir.
Thank you. The next question is from the line of Chinmay Kabra from MK Global Financial Services. Please go ahead.
Yeah, hi, sir. Am I audible?
Yeah, you are very audible, sir.
Congratulations on a good set of numbers. Sir, I just wanted to, I had a request if you could just repeat the guidance that you had initially given for FY25 and 26.
24-25, our top line will be 2,500 and 35 rupees, sir. That was the guidance we gave. And for 26, 3,500 plus as a top line and a EPS of no less than 50 rupees.
And if I'm not wrong, the guidance for margins is what is the guidance for margins, sir? If you could just...
We continue to maintain at 13%, sir.
All right, sir. Yeah, those are my questions. Thank you.
Thank you. The next question is from the line of Shreyash Gathani from SG Securities. Please go ahead.
Good afternoon, sir. My question was actually on the data center side. So we've invested 300 crores of the 1,200 crores that we intend to. So just wanted to know what is I know that the capex is going to be back-ended mainly, but trying to understand what is the status of the project since we've seen delays. Has there been any redesigning or anything as such? And my next question was on the partner that you're looking at. What is the status on that? Because since the last 6 to 9 months, we've been guiding that, we are working with a few partners for the project.
Yeah, sure. Basically, the total project is 1,200 when all 40 megawatt or 24 megawatt of IT is completed. At the moment, we are doing phase 1 only of 6 megawatt. The capex for 6 megawatt is almost about 450 CR, out of which we have spent 300 CR plus. And this will be now in a last leg of the work going on, more on electromechanical side and instrumentation side, which should be completed by September end. Yes, there has been a bit of a delay because of the delay in civil works, largely because last time there was a weather and cyclonic impact in Chennai, and the labor was almost missing for 2 months. And lot of water logging happened in the city, not to our project. So all that have impacted a bit, but of course, redesigning also is an ongoing exercise as our new directors are guiding us, who are more hands-on than our consultants deployed initially. So all put together, I will say that it has been worth the time spent on the asset. Still, we are able to make it ready within 2 years from the date of taking up the project.
Got it. That is very helpful to know. So the first phase, you're looking at operating by ourselves, or is that going to be with a partner as we had initially envisaged?
We are open to both, sir. Otherwise, we are ready to do ourselves. Absolutely.
Okay. So we have any clients in the pipeline as of yet, or we are going to start looking going forward?
No, we are in this market. People approach us, we talk to them, we adapt them, and it's an ongoing exercise.
Got it. So just last question. So when should we expect the 24 megawatt to be operational?
You can take it March 26.
March 26?
Yeah.
Oh, okay. So that's a year and almost 2 years from now.
And about 18 months from the date of first phase.
Okay. Got it. All right. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you. The next question is from the line of Chintan Doshi from Wealth Plus Financial Solutions. Please go ahead.
Yeah. Hello, sir. So thank you for congratulations for a very good set of numbers. Sir, I have a question from the data center part that you just mentioned that you just received a land from the Kolkata data center to be set up. So do we have any timelines for this particular project to get started for the Kolkata? Because you just mentioned this on the call today first time.
Yeah, definitely. It is already in design phase now, let me say. And first set of design should be available to us by no later than October, I can say. And we should be starting construction of this project by January 25.
Okay. Second question, sir, that I just want to understand the thing about, so normally in the 1 megawatt, if I can understand the costing of 1 megawatt data center is roughly going at 45 CR, right? So how we are planning to monetize it? I mean, are we really looking to sell the data center after we build it out, or are we looking to lease out the capacity? So have you planned on the model or monetization of the data center, or are we looking to, like as you said, like we are going to run by ourselves? So any kind of a guidance or any kind of a update, like what we are looking forward to, monetize the data center that we are going to create?
Ankit, will you like to answer this question?
Yes, sure. So, as far as monetization is concerned, we've always maintained that we are looking for a strategic partner over the last 2 years of construction. And my bit to this would be that, very recently we were successful in a bid by RailTel, where we have to establish some edge data centers in 100 locations across India. This covers almost 23 states out of 28 states, giving us the widest presence of data center in the country, or makes us the largest DC operator in terms of number of data center and capacity now. And post receiving the LOA for this order, for this project, though we have not announced it yet, but post receiving, there's a shift in strategy that we actually don't want to exit our Chennai project today. We would like to operate it, we would like to lease it, because the kind of ecosystem that we will be sitting on, considering that we have 2 large data centers coming in Chennai and Calcutta, which will be interconnected to all these 102 edge data centers per se, or let's say more than 102 edge data centers, 102 locations. It's going to be an ecosystem which cannot be replicated by anyone in the country for at least next, I would say 7 to 8 years. And with this unique proposition, I think the infrastructure and the model that we will have, it's one of a kind, especially for a country like India. We will be reaching almost, I would say 50% of India's population at the lowest latency levels possible. So technically also it's going to be extremely sound. So given this given this position of the company and the project and the entire vision of the data center vertical, at least we would like to hold on to these assets for some time, unless we are able to double down on the values. And we'll be able to find some really interesting customers given this position today. No one can today match this infrastructure, the one which will be sitting on after having RailTel, because the kind of span railway has, which is in the center of every city, you will be located in the most densely populated areas. You are sitting on 80,000 kilometers of fiber, which is owned by RailTel today as part of railways, which is not available with anyone, but it's close to with only Jio and Airtel. So these kind of, and power comes from railways. The power which we'll be using for data center also comes from railways. So the input side is completely managed, whether we talk land, fiber, power. So this unique proposition is why we want to keep on to that Chennai project and see what valuation we can create for Chennai given this ecosystem now.
Sir, I'm sorry, to just additional question to this is that basically the cost that 45 CR per megawatt, is it high enough because there are a competitor in the market? I would not like to take the name, but they are also building a data center, and they are having you can say a lesser amount of money required for 1 megawatt compared like 25 CR because they have their own land in hand. So are we also looking forward for the same rate? I mean, is like in Kolkata or any other data center that we are going forward, are we going to remain in the same range of the 45 CR for 1 megawatt, or are we going to try to come down or bring down our cost for building that data center?
We are in this range only, sir, or maybe lower.
Okay.
We don't want to be in high land cost brackets. They are very economically procured land parcels by us from the government, and the budget will be below it only. It will be no more than 40-45 CR per megawatt.
And if you can just give us that, what is the market like, if we lease out because we don't have the number, sir. If we lease out right now, you must have idea about the market. If we lease out after completing the data center, 1 megawatt, or what will be the potential that one can generate in a lease income on a 1 megawatt? So that will give us the understanding of how the data center business will look like for our Chennai data center.
Sir, please, a data center is an intelligent institution or an installation. The value paid here depends on the users. To what use he puts that installation to. The tariffs vary in this market anywhere from $60 to $100 plus, depending on what kind of use he is able to put to. So it is very user specific. So we will always look for more of the users who matches the specs of the data center as a first choice. But as an interim choice, to get it occupied, we may a bit compromise for some time here and there, but that will not be as a business policy on a sustainable basis. At the end of the day, your asset has to be deployed to for what it is worth and for which a owner is putting it to use. It is an affordability question. It is the value of the data center lies in its affordability. It is not a commodity, sir, that you buy. If somebody sells at X, you must sell at X minus Y. It is not so.
Okay, sir. Thank you. Thank you very much.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good evening, sir, and congratulations on a good set of numbers. Sir, in this quarter, we saw a little bit lower sort of, in terms of revenues. So, were there any one-offs and which could have got spilled over into quarter one of this year?
Yes and no, both, sir, because land acquisition to the power grid and other private players is posing a bit of a delay of 6 months. So many orders which we got last year, still land is not provided to us. So progress happens here when land is provided to you by the agency, whether it is power grid or sunlight or runnings or in-grid. So those are the issues, sir, which we believe are short-term.
Okay. And on this
otherwise, definitely we could have added another 200 CR had land happened in time.
Understood, sir. And on this railways data center, sir, because we have bidded for it and we have received a LOA, so what is the kind of, expenditure that we will have to incur? What will be our revenue model to earn from this opportunity? And if you can throw some light on how, this makes us one of the largest player in terms of the total size, not the numbers, but total size of data center. I could not understand this because you also alluded to some figure of around 1,000 crore, which looks very small. So can you please shed some more light on this project?
Ankit, will you like to answer it?
Yeah, so just to, as I was mentioning, that this project has to be done at 102 locations. And the reason why the number of 1,000 CR came forward is because we are estimating. It's because today it is not defined that what would be the size of each data center at the respective location. It can be of varied sizes. It can start from 100 kilowatt going into couple of megawatt or more. So it depends on the land that we get. Ultimately, we desire and get allotted from railways. And depending on the land size and the potential of business at each of these locations, that we can decide on the size of the data center. So it's very difficult to quantify the capital required today. But considering the minimum size that we would think of doing in every location, let's say even if we think of 100 kilowatt to begin with, it turns out to be 1,000 crore odd investment. But obviously, if in any location we see potential of more in megawatt terms, we will keep expanding in that location over the time, because it's a concession of almost 25 years.
And what is the timeline for the initial execution?
We have 20 locations every year, and in 5 years we have to complete 102 locations. That means the last year we have to do 22 locations. We can do more also, but minimum is 20 locations every year. So we'll keep a commissioning target of 12 months from the date we are allotted the land.
And how is this related to your the other two data centers business? What kind of synergies are created, and what is the revenue model for this railways data center that will be provided to you?
Please visit our office for detailing, on a conference call. I think you will feel it is very elaborate answers to your questions.
Sure, sir.
To justify them.
Sure, sir. I'll do that. Sir, last question is that now we also spoke about scaling the internal organization to be able to cater to this about large opportunities which are opening up. But if I look at this year numbers, sir, we are only seeing around 10% odd increase in the employee and other expenses. So much so that most of our EBITDA increase has actually happened because our overheads have not increased at the pace of our revenues, even though our gross margins have declined. So I mean, how do you see that? I mean, should we see a large increase next year onwards because of all these people coming in, new offices getting opened? How will that translate, sir, next year? Because this year somehow it is not visible in the numbers. And how should that impact our overall margins next year?
It won't be, you see, although we are investing in the growth, but definitely it won't impact the margins, because we are growing with the productivity. Growth is productive, and we match the costs with the growth happening in the company. And definitely this year you will find more growth than last year. And secondly, sometimes, it depends how you book the cost. These costs, what you see, are happening more in the field, and we take these costs as a part of the job cost itself. So that is only a method of your accounting policy sometimes. It will be growing with it.
Understood, sir. Again, congratulations, sir, and look forward to better numbers, even better numbers next quarter onwards. Thank you.
Thank you. The last question is from the line of Amit Anwani from PL Capital. Please go ahead.
Hi, sir. Thanks for taking my question. My question again on the, sir, RailTel opportunity which you highlighted about 1,000 crore. So is it fair to assume that we are factoring in some 20-25 megawatt collectively? That is one. And second, concession, you mean to say the first 5 years will be building this data centers, and the next 20-25 years will be maintaining this data centers? So this will be on our balance sheet, or how the model is going to work? And third thing is, how will be the funding for this 1,000 crore capex which you have highlighted for the edge data centers? Yeah.
Ankit, please answer.
Yeah, sure. So it's not about 20-25 megawatt. We are considering, let's say, about 10 odd megawatt for the entire 102 locations, minimum that I'm saying. And edge data centers are a little more capital intensive than regular data centers because of the technology that goes into it, and you don't achieve those economies of scale of large data centers. But then rewards are also accordingly priced in the market, like to like. Secondly, we said that we'll be doing 100 data centers in 5 years, like 20 data centers every year, and yes, we have to operate these data centers. It's almost like a DBFOT project where we design, build, operate, finance, and then after 20-25 years, we have to transfer it back to RailTel. And so that's largely the project, and at least initial few projects we will be funding it internally through internal accruals of Techno Electric, and as we gain customers, we can go for financing for the future deployments.
Sure. So will it be kind of 70-30 funding, typically, which happens for any project?
Difficult to say today because one needs to understand the cost and reward ratios for edge data centers. It's something which has not been practiced in India today. It's largely practiced only in US and Europe. It's the first time it's happening in India. So we'll have to also learn what kind of financial modeling is possible. But yeah, we should be able to do at least 60-40, if not 70-30.
And so lastly, any IRR or any metrics, return metrics, which you're looking for this project?
Largely for data centers, the IRR should be in high teens to early 20s. So there's no difference when it comes to edge or a large data center. Edge data center is also a data center only. Just because it's closer to the consumer or consumption point, we call it at the edge. So that's the only difference. So yeah, IRR's return portfolio will also remain the same.
And can we say that this is just the pilot project and there could be many more edge data centers? What kind of opportunities there from RailTel, with respect to this kind of projects next 2-3 years?
I don't know. Difficult to say. I don't see RailTel coming out with more such projects because they have consumed their entire 100. Difficult to say. Maybe they come for more. I guess that's a question for them. But yes, edge data centers are bound to grow in India, and it has an exponential potential, especially for a market like India, which is so widespread by geography. Edge has great potential.
Thank you very much, sir, for answers. Thank you. All the best.
Thank you. Ladies and gentlemen, we'll take this as the last question. And I've handed the conference over to the management for closing comments. Management. Hello, Aniket sir.
Hello.
Yes, sir.
Yeah. Just thank you all for joining the conference call, and we'll be happy to address any query that you may have in relation to our performance or whatever that has got discussed, or if you would like to know more. Everyone's welcome to our office, have interactive sessions to learn more about what we are doing and what we plan to do going forward. And with this, I'd like to close the conference and thank everyone for taking out their valuable time and joining us.
Thank you. On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.